Shoot for the stars, if you fall, I will be right here. I go where you go, and we can go anywhere. Over the skyline and over the atmosphere. You know I'll follow you into the other side. Other side. Other side. You know I'll follow you into the other side. Other
All right, guys, what is going on? What is good? What is good? Welcome to Friday's stream. And I hope you have had a good week so far. All right, we should be pretty good to go. Yeah. You guys learn a lot this week or what? Let me ask you this too. Was today difficult for you? I mean, you know, even myself, I think today was fairly challenging. I don't think it was impossible, but I definitely think it was challenging. So while you guys are doing that, I'll do the intro real quick. What's good, Willow? Sheriff, Marius Jasper is short on Dow. That's good if you are. 2020, Naruto, Amin, Bell, Marshall, Libright. A green week is a green week. I would agree. What's good, Broadway, Natasha, Toby, Mason, Jonas, Jay Jones, Smalley, Felix, Eberneth, Cody, Zachjo, Sean. And yeah, NSC is a little bit difficult. Requires a lot of patience. Got 1% and ran. Well, better than how I did. I didn't do anything today. I wanted to, and I just decided not to. And I'm kind of glad I did on the emotional side of things, because I went outside. It was a beautiful day for a little bit, so I'm like, I'll just go outside. I only regret it a little bit because I'll get into that, but I was looking for I'll show you when we get to the indices. I'll show you in NASDAQ as well. I'll show you a couple things. But overall, I'm I'm satisfied with the week where it's at. So, you know, I'll leave it there. Break even day for me, lost some, made some, locked myself out. Nothing wrong with that. Indices were challenging today, says Doc Joe, especially deciding which to trade and what direction to trust. Nice. I'll go over that too. Toby got a good entry on ES and closed early with a small loss because we spent quite some time in the entry area, which I didn't like. Toby, you're just like me. I don't like that. But again, I'll go over it. I'll go over that in a minute. Yeah, 1 to 4, and I'm out the door, Lucas. That's how we do it. Drop a like if you guys are ready to go. Y'all never do it. Y'all never drop a like, bro. Y'all fucking hate me. You guys hate me with so much passion. It's insane. As much free sauce as I give you, you don't give me shit in return, chat. You guys are fucking horrendous. I'm not taking no questions today. Fuck y'all. I'll go over what I want to go over today. How about that? Since y'all want to be fucking up on a Friday. That's what we're doing today, chat. We woke up and decided that's what we're going to do today. Tisk, 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 chat. Anyway. Whatever. All right. So at least let me get into some real shit. The music is bothering me. It's distracting. Yesterday, okay. Yesterday, the 26th for right. So Thursday, yesterday, Australian dollar, right? Absolutely fucking massacred that. Let me at least tell you my process, okay? When I'm on the charts, when I get to the charts, okay? Indices. I'm looking at indices. If I don't see anything, or if I just want to just do my normal scrolling, right, through the assets, it goes the 3 indices, ES, NASDAQ, Dow, mainly ES and NASDAQ though. Dow's kind of I haven't traded Dow in a long time. And then I'll move into the metals, gold and silver. And then after that, I'll go into the majors. I'll look at some, I'll look at dollar index, euro, pound, Aussie Kiwi, and I'll briefly look at like USD CAD and the yen, but I never really trade those. So there's your, order of how I do things. Okay. So because I usually don't talk about currencies all that much. I know I used to a lot. And if you remember yesterday, and I haven't deleted all that. I wanted to keep that there, at least for now. But when it comes to trade setups, trade ideas, okay? If I want to put real money at risk, if I want to put real risk up, I need to find something high probability. So the things that I look for are no different than what you've already been given. So let's bring this, excuse me. I shouldn't have ate all those chips before stream. It's a cheat day, so I'm like, I'm gonna eat some chips. But let me leave this up here for a minute. Those Lays, man, they'll come back and get you. They'll come back and get you, man. Anyway, so remember I gave you this, right? Stop loss placement and upside targets, low resistant highs. You guys can see that, right? Yeah. Low resistant highs, equal highs. Okay. I need that on the upside. I need that. If I don't have it, I'm not going to trust it as much as, say, I'll still trust previous day high and low or equities open high and low, stuff like that. But when these are here, that's I cannot trade with utmost confidence unless I have either one of these two for the upside or one of these two for the downside, low resistant lows or equal lows. Okay. So drop a one if you guys are understanding that. I know there's some new people here too, so I want to make sure you guys get some. We should already went through the beginners series, but I know some of you don't. You know, can't even get a like on the stream, so of course you're not gonna watch a hour and a half course. So look, I'll teach you one way or another. All right, you don't have a choice. And yes, it did, Zach Joe. Yes, it did. Yes, it did. Was good, Robert. Did you notice the mitigation on Dow during the open? No. Well, no, I didn't. I hardly look at Dow. Dookie ass Dow. Okay. But nonetheless, having this information, okay, brings me over into this, right? So as always, you have to look at the highs and you have to look at the lows. Okay, identify them. What's up, Carcel? Go back to the basics. Okay. Do you guys remember? Some of you might not have had this, and that's okay. I saw this a couple months ago because my friends they have a kid. I think he just turned 7. But I remember I showed up to their house one time and there were kids at the dinner table and he was practicing his writing. And so you know how they put the alphabet in here? Like they'll do A and then they'll do a lowercase a. They'll do the uppercase B and the lowercase b, right? You guys know what I'm talking about, right? Like kindergarten, first grade, like elementary, learning your ABCs, right? What's an A, what's an uppercase A, what's a lowercase a. And so there's the parameters, right? There's the halfway point and all that. And so you're supposed to take an actual, pencil or a pen and you do it yourself. You look at the uppercase A and the lowercase a and you go, okay, well, I'll practice it. I gotta do an A. And a child, they're gonna fuck it up, dude. They're gonna have they're gonna do some shit like that, or they might not make it as large enough. They'll do some bullshit like this, or they'll make the lowercase the uppercase size, because again, they're learning, right? They're learning. And it's funny at first. You're like, oh, that's interesting how you did that. Not saying my friend did this, but I'm saying as a child, you're learning. So you have to sit down and go, okay, look, man, you fucked that up. Don't speak to a child that way, but I'm speaking to you that way because you're all adults. You say, okay, look, man, that's a lowercase a, but you made it the size of a larger one. You need to, bring it back here, right? Go back to the basics, okay? And go back to what I've given you. This right here. I cannot make it any easier than this right here. Targets, stop loss placements. There's only 6. 4 targets, 2 stops. Okay? This is your basic. This right here is your outline of like that sheet of paper that has all the ABCs on it, uppercase, lowercase, exclamation mark, all that shit. Right? So, pretend like you're a child. Because if you haven't been trading probably for like 5 years, guess what? You're a child in trading. Okay? And that's okay. We've all been there. So identify stuff. Oh, are those low resistant lows? Yeah, great. What are these? Equal highs or low resistant highs? Okay, low resistant highs. You can label it however you want. Okay, low resistant lows. Cool. Moving forward, there's a low here, there's a low here, market rallies. Okay. So with a lower low, which one of these is that? Is that a lower low? Nope. Is that a lower low? No. That's a lower low. Oh. Interesting, right? Okay, great. So that lower low, that's not a target, that's stop loss placement. Oh, okay, great. Well, wait a minute. We have a high here. We have a high here. Whoops. And then we have low resistant highs. So that is what? A target for the upside. Okay. I don't know why the pen is like so bad like this. That's supposed to be a target. Okay. And it's literally that simple. So when you start looking at price, okay, retracement, do we ever make a lower low? No. Okay. And then of course, just like I have that on here, this is screenshotted because it's today, but this was yesterday. Okay. But at the time when you take a screenshot in Discord, it'll tell you today or it'll give you the date. Okay. So this was taken yesterday. So yesterday at 9:36, that's right here, I said I'll be watching AUD. And that was after a reply, I think, to Anas. So it was like either in that minute or just after. Okay. So all you had to do was take 2 seconds. He's looking at AUD. Okay, what the fuck is over there? High resistant lows, low resistant highs. Bam! Bull market. Okay. 48 drawings. Jesus. I'm going to take everything off now because you already know that's there. All right. So, just like I've been telling you to do your exercise. There's your lowest low. So, from the highest high down to the lowest low, there's your sell side price delivery. And then obviously moving forward is your buy side price delivery. Now, I think to get the most out of this exercise though, is to not look so much at the buy side yet, to kind of hide it, right? Like, no, it's there, but just hide it. And then, and I think, who was that the other day? Is one of you. Anyway, I said to take a horizontal ray and draw it from concepts that were utilized for shorts. Okay. So, as an example, okay, those two here, these two up candles here, were utilized to go lower. You guys see that? Utilized to go lower. Moving more, okay, right here, you can see what? These up candles were utilized here to go lower. Okay. I know it's kind of, I know it's a little bit dark. It might help if we shade this just slightly differently. I think that helps a little bit. But nonetheless, okay? So, what have you been studying? What you sow, you shall reap. Right? So, what was once slightly bearish, okay? Again, these two here, actually, let's make this a different thickness so we can tell the difference, because that's kind of fucking, it's kind of fucking me up right now. These up candles, okay, were utilized here. See that? These up candles were utilized here. You see how that works? Which again, that's an exercise that you should have already been doing. And what was the full extension from these levels? A lot higher. But anyway, you know, the point is stick to the basics. What's good, Bruce? I think that was Electric who I might have been talking to the other day about this, right? Taking the horizontal rays and extending them out. What was once bearish becomes bullish, okay? And there's a lot more to it than that, okay? Not just these up candles that were utilized, okay? There's a lot more than that. You could even go as far as saying that there was an imbalance here that was utilized to go lower, right? But what happened there? It got traded through, became an inversion. You see that? There was one more thing over here that was on the future side that is not displaying on the FX side, like the pairs, right? But AUD futures had a gap right here that was utilized later. Okay. But nonetheless, anything in here could have been optional to go long. All right. And I forgot where I was. There was a point I wanted to end up making with that, and I don't remember what it was. But that's right. I guess the highs and lows. If I don't have this, then it's hard for me to determine, you know, what's going to happen. So I'll give you an example. Okay. Matter of fact, I'll give you two. Okay. I'll give you two scenarios that I do not trade, or at least with live price. I might do a demo or like a paper account just to, you know, participate in that regard. But am I going to put real money at risk with something like this? Ugh. No. Heavens no. What's going on here? Okay. What I've you should be able to see that. Okay. So what happened here? High resistant highs. What happened here? High resistant lows. So I can't justify the market going lower. All right. Can't justify the market going higher. All right. And then price is in the middle of a range. That's low probability. I can't do it. I mean, I can, but it's not good. Okay. And the same, so that's one. Okay. And the other one is what I've always told you. If you have liquidity, either equal lows or low resistant lows, and then you've got equal highs or low resistant highs and prices also in the middle, that is another scenario. I can't do it. All right. But the shortest version of that is if you can justify both sides. You could justify longs, you could justify shorts. Or you can justify longs and you can justify shorts. Two sides of the same coin. It means low probability, I don't know. So I'll sit on the sidelines. Does that make sense? So drop a 2 if you guys are getting what I'm saying. Or if you just want to be straight up lazy, when price is near 50%, just don't trade it. If you want to take the laziest approach, just, all right, John, you've been talking for 20 minutes. Just give me the cliff notes. Okay, price is near 50%. Don't fucking touch it. All right. You're going to miss a lot of trades. You know, because of stuff like this. This is somewhat near 50%. But yet that was utilized to go long. Because this is high probability. Why else, okay, watch this. Why else would I justify going long at 50%? I've said this before. I said this a long time ago, but I'll say it again. Because I know Most of you don't write it down. And then you're going to be like, oh yeah, I remember you said that. Okay. Why else would I justify going long at 50%? Why else? Because even though 50% is fair value, right? It's a fair value level. It's not prime for shorts. It's not prime for longs. It's just meeting in the middle. It's a negotiation, right? Nobody really wins in a negotiation when you both just meet in the middle. It's a fair deal because there's no advantage, right? The advantage to longing near 50% or just below it, okay, is because fair value is a discount if the market is primed to go higher. Because again, we have high resistant lows. And then I forgot to mention this in the market review last night, but I'll give it to you here because, you know, told you you're going to learn it one way or another. Australian dollar is moving higher here, and New Zealand dollar was lower. Or it's, well, the lows are they got to be lined up, you know that. But New Zealand was lower here. And so that is indication of Aussie's strength. And when I showed you the executions, one of them was up here and another one was right in here. And I was buying into strength. Okay? So that's what that looks like. But again, 50% or slightly below it, even though it's fair value, that's technically a discount if the market is primed to go higher. All right. Are you picking up what I'm putting down, chat? So there you have it. All right. Now, with that being said, let's go hop back into silver. I think I had opened up with earlier. The downside objective for silver, I'm not sure what that would have been, to be fair. But what I did like over here was, again, that third or that second higher high, right? There's a high, a higher high, and then that second higher high, which is the third high of that series. We have this up candle here that gets traded through here at 840, right? So there is your shift in price delivery. Okay. Right there. And that's why you see that drawing here, the risk reward tool. That's why I put it right there, because I'm putting it at the open of this up candle, fractal high as well. So again, let's come back. When we have two higher highs, right? When we have that 1, 2, 3 formation higher, that's this. Even though the depiction only has a higher high, because I try to keep things as simple as possible for you. But this high and higher high is right here. Okay? So in the graphic depiction that you have already, that's been out there for a while, and it's in that video series, and I gave you the inversion model, you don't really have an inversion here. You have one here, which was later utilized. That's the only one right there that I would really look at. This is all a lot of back and forth. That's the only one right there that was utilized for higher pricing that traded through and was later used for shorts. But the point is, the stop goes to the high. So whatever that risk is, from 32.46 up to 32.59, okay, whatever that is, twice lower. That's what that is. Okay, so it's nothing like super fancy. You know, I wasn't, I'm not going to say like, oh, swing for the fences here, right? Because I don't really see too much down here. You have very small lows here. Okay. And that's fine. But at this particular point, I think you have this. And then you have those. See that? So on gold, you had 2684.3 here. That was the low at 715. The low at 715 is right here. And that was just beyond that target. So let me say that again because some of you did not catch that. Look at gold. Okay. Matter of fact, we need the time. Pardon me. 7:45 and silver made a high at 8:35. Okay. 8:35 is here. See that? Let's do that again. 7:45 to 8:35. So what's happening here? Gold swept yesterday's whatever high that is. Okay. Evening, Asia, whatever. That high there was swept here. So what does that make? What does that make? Look, high resistant highs on a 1 minute, and then that higher high here makes high resistant highs on a higher time frame. Okay. Now don't get the lines confused. This at 8:35, because we have a high and a lower high compared to silver, I'm showing you this is weakness. So that's weakness on the side of gold. So if it's going to trade lower, what should it trade to? At a minimum, a new low, right? Which is also part of low resistant lows. Now, I had to zoom out a little bit earlier to figure out what this is over here. And what do you think that is? My gray boxes are always the same, chat. It is a daily imbalance. Because look at gold. All right. I mean, we're looking at it, but I'm saying Wednesday, the 18th, 19th, 20th, the 23rd, the 24th, Wednesday, the 25th, and yesterday was all up close. Like 7 or 8 up candles consecutively. Markets are only going to go up, you know, for so long. Okay. So when it starts to display weakness, that's here. It failed to make a higher high relative to silver. Okay. That's manipulation. That's, in my opinion, that's distribution, right? Because they're smart money is going to exit above old highs, right? They're going to sell to willing buyers. Who buys above old highs? Goobers, right? That's why we don't do it. And that's weakness. You remember that rule I told you 1,000 times already? In bearish markets, up candles are respected. What are you seeing right there? What are you seeing right here? It spends a little bit of time there, right? On this 5-minute time frame. So this up candle, right? Where does price never trade to? Halfway. See that? It never trades to halfway. What does that mean? If we know price, if it can't get to 50% of a retracement on an imbalance, right? if the imbalance is below the market comes down into that imbalance and it can't get 50%, it can't go lower, it can't even meet 50%, much less below it. That's a bull market, right? That's a signature of strength. If we have distribution, weakness, okay, again, that lower high in relevance to silver, and then we have an up candle that also cannot get to 50%, that's another signature of weakness. Even though there's equal highs right there, I see that. But that high here, again, that's weakness. This is also weakness. Trades lower, doesn't take the lows, comes up. What's it come up for? Those up candles here. Right there. Boom. See that? So it hits those, trades lower, hits those, trades lower. And then eventually, and I didn't think it would go that low, to be fair. I would have said something in the Discord if I believed it. But it ended up taking off for that daily imbalance down here. Okay? So I know one of you posted a chart of gold in here and it went lower, and now you know why. Because that daily imbalance is sitting right here. Okay? And again, that's manipulation. Everything in here was weakness, and you don't want to long into weakness because this is what happens. The small time frame equal highs here are not as important as that daily imbalance down here. The daily time frame, higher levels of liquidity will always take precedence. That will always happen. Okay? That's what's important. And that's why you have to do top-down analysis, so you don't miss things like that. So you don't miss things like this. Okay? So you're not trying to long after fucking 9 days, 3, 6, 7 up days in a row and then trying to long, you know, on the 8th day. Okay? So be careful. That's all I'm saying. Be careful. All right? So gold lower, all that stuff up in here was silver. All right, we'll go take a look at that daily as well. I don't think I showed you the daily here for silver. Similar imbalance. All right, there it is. Boom, right into it. So again, although we don't have, you know, something that is as basic like equal lows or low resistant lows, you still have a higher time frame target. All right. And again, I'm not saying you got to catch the whole move. I'm not saying, yeah, oh, you should be in here, capture the whole daily range 1 to 5 and, you know, fucking brag to everybody and then go buy your mom a Lamborghini. Okay. I'm not saying that, but I'm just saying you're getting in at one of the earliest available turns in the market. That's right after distribution. Okay. Or right after signs of weakness. Okay. And then even now, even, you know, on this live stream, take a look at it. What's taking place? High, and then that's a higher high, right? Look at that candle right there. Traded right off of it and then lower. Okay. Are we going to long with the target here? No. We're not going to do that. Those are high resistant highs. What about these lows? Are those high resistant lows or low resistant lows? Low resistant lows. So this is a stop loss placement idea. This is a target idea. What has gold done on this 5-minute time frame? This entire stream. It's traded lower. Okay. Now, you know, I'm not going to say you should have done this or done that, but we're going to study price together. Okay. We're going to study price together. Higher high with the lows. Okay. Price trades through that. Down candle here. Back into the imbalance created on the way lower. So there's a mitigation model. Stop loss. Target. Easy. Okay? Easy. And yeah, Libre, I don't know where you must not be logged in, or you must have canceled your subscription. But either way, that's what that looks like. Okay. Now I spent all the time over here on the metals. I haven't gone back into the indices. I wanted to talk about NQ for just a minute, and this is what's problematic. Okay, at least for the PM session. I mentioned two levels this morning, 20,280, and I mentioned 20,396 or 395.70. I think I just rounded up to 396, and we were right in the middle of that. Okay, right around. I don't remember the first time I mentioned it. I don't remember the exact minute marker. And then I know on the way down somewhere in here, I said 20,280 is still on the table. Okay. So here's a shitty example. Okay. Here's a shitty example. This is what I was watching earlier. Okay. And that's why I said I still have my interest is in 280 after this move lower, because high, low, higher high that took liquidity, and we traded lower gunning for that 280 level. What does that make this? A mitigation. Okay. Now here's, in my opinion, what the shitty part is. Based on what I've already given you, okay? It technically trades lower here and then back into this mitigation. There's a small imbalance right here too. So watch this, okay? I need you to pay attention here. Don't miss this. But this is why I'm telling you I think it's shitty. If you short right into that imbalance, okay? And I've already told you time and time again, for mitigation, or for the mitigation model, there's different stop loss placements. One of them is at the higher end, say, of an imbalance, right? That wouldn't have worked very well. Going lower, I mean, it eventually comes back up for that, right? But what have I also given you? In previous streams, remember, what did I give you? I said, if you really want to, minimize your stop loss, where can it go? And yeah, I don't know, Libre. I don't know. I told you guys that the stop can go to the high end of the mitigation, or maybe a little bit above it. There's something over here. Okay. So then again, here's the hard part. Here's the hard part, or the shitty part that is interesting to me. There's your 1 to 2. All right. But watch this. It goes in your favor, makes a new low, comes all the way back up, never goes to the stop, comes all the way back for 20,280. Boom, right? That little GIF I posted earlier, right? It's like, bang, there's your 280. But you don't get the 1 to 2 until it comes all the way back up, then lower, and then finally reaches, for that 1 to 2. So this to me it's awful, I mean, how much sideways movement are you going to hold, right? I know most of you probably would have been break even after a new low or after that target was met, and I would agree. But imagine, again, for sake of conversation, imagine you're watching price print, you get the alert, and then it stops like 5 points below your 1 to 2 and then completely yoinks the other way. Yeah, Willow, that's my point. It's like, oh my God, it's bullshit. It's so much give and take, back and forth. And this type of market environment, the only time this works really well, and I'll have to give them their flowers, but I dog these people all the time. I dog those people who are like, oh, just take the trade and walk away. I've always said that's so stupid. That's idiotic. That's just flat out retarded, right? Because there's no trade management. Days like today is the only time that stupid shit would have worked. Okay? That's the only time that stupid shit would have worked. Great. You get your, what, one day out of the month, 2 days out of the month? Like, all right, that's fine. But whatever. Nonetheless, that's there. So all in all, high resistant highs, mitigation to go to these lows here. Okay? And then you have that set way over here. Way back from the 26th morning session here. Okay, so that's 20,188. So when you zoom out or you come back to the live chart, that's what this level is down here. So I still think that could be on the table for today. I can tell you now, I'm not trading today. Matter of fact, I was supposed to order my food already, but I didn't want to, take away from the stream. But I got it in my cart. I just got to buy it. So I'm just going to do that real quick because I am literally starving like a motherfucker right now. Pepperoni and bacon pizza, chat. You good with that? It's a cheat day. So I'm going for the pepperoni and bacon pizza. Anyway, there's low resistant lows. And then right in here, you have some, let me just take that off. I'll just borrow this. You got some highs here too. On a, I don't want to say significant, but it's been heavily bearish today. You might have trailing stops here. So it could reach up into that. But where are we at? What was that image I gave you earlier? The drawing, rather. I told you there was two scenarios where I do not want to take a trade. And one of them was what? When we have highs and lows and then price. Oops. It's all fucked up now. When price is in the middle. And that's where we're at. We have highs here. We have lows down here. Price is in the middle. All right. So what are we supposed to do? And yeah, I agree, Josh. I totally agree. So anyway, just to recap, because we got about 10 minutes left or so, let's just recap this real quick. We went over how, Aussie, right, from yesterday. But I told you the process. I'm looking at indices, I'm looking at metals, and then I'll go into currencies. But currencies is like my last, it's like my, last opportunity. And I hardly trade those. I prefer indices. But I prefer indices when they're clean, not what we're seeing now. What is NASDAQ correlated to and affected by? Me. I tell it what to do, Abel. When I command it to move, it fucking moves. I'm totally kidding, but only when there's high probability setups. But NASDAQ's heavily correlated with ES. And ES is heavily correlated with NQ. Dow used to be heavily correlated with them, but the last couple of years, it's been very not that way. So like NASDAQ's lower, right, on the day. There was some opportunity this morning with ES. I forgot to go over this. Inversion model here, but again, just like NASDAQ, it spent so much time here. Okay, so much time there. This down candle was respected here for longs. Right? Traded through. Inverted here to go lower. Why would it go to this low? What's at 9 o'clock? What's at 9 o'clock? The very exercise I gave you recently. 8 to 9. What's between 8 and 9? Equities open liquidity. There's 9 o'clock. Right at the open of 9 o'clock, really. Right there. There's your highest high. So we grabbed the highest high like right after that. If you technically want to count it only till 8:59, technically it'd be those lows here. Like technically it would be that. But either way, there's some lows here. Okay. And I don't remember if it had something lower, kinda. There's some equal lows on a small time frame right there. See that? 57.97, which was later met, but I didn't think we'd do that. Okay. Because as per usual, if I think it's gonna go there, I'll say something. I'll mention a level. But if I'm like, that's kind of far, small time frame, I don't know. If I don't know, I just won't say anything. Okay. So there it is. But nonetheless, lower pricing, but this just looks so janky to me. Okay. And then Dow that whole time was higher. Like that entire time, all the way up until like right around 10:30, Dow was just pushing higher and higher and higher and higher. So, you know, I don't even know what to tell you in relation to the Dow. I don't have anything for you there. Literally, I have nothing. So anyway, sorry, let me get through this recap real quick. I told you that I start with indices, go to metals, and then into currencies. But those are the things I'm looking for. As soon as I open the chart, that's what I'm looking for. All of these. Low resistant highs equal highs, low resistant lows equal lows. On all the time frames. Start on your way down, you know, or start on your way higher and move down. You know, see if there's key levels there. You know, if you've got equal lows and then there's a daily imbalance right below that, oh baby, you got yourself a banger. Okay. But, you know, or say something like, oh, you hit a daily imbalance and now you've got equal highs on small time frame. Oh, that's a banger too. Right. And so that's what I'm doing. I'm looking for high probability setups. And so that's why, right? I mean, think about this, chat. And I'm not trying to brag too much because, you know, I don't want to be known for that. But think about this. When was the last time you ever heard me talk about Australian dollar? When was the last time you heard me talk about Australian dollar? I mean, it's been what, months? Maybe like 6, 7, 8 months. It's been a long, long time, right? But then all of a sudden, when I bring it up, there's something clean that's over there. And you saw those entries on the paper side, right? I traded multiple accounts. I showed you the paper one though. Right? Full disclosure, because the entries were significantly better on this account. Right? Look at that. Long, out. So how can I come in here to something that I don't look at that often? I almost never talk about it, but I come in here and I do this and I just walk out the door, right? It's because, you know, I wouldn't say, you know, they say to like, oh, specialize in one thing or, you know, just trade like one or two assets, but it's like they all do the same things. So to me, it's just a matter of which one has a good setup or not, right? Which one has liquidity taken, like up here, right? Liquidity taken to seek opposing liquidity. That's what I'm looking for. Mind you, there's a lot of chop today up in this area, sure. But any, like under normal average day conditions, it won't do stuff like this. It'll be a little more clean like Australian dollar was yesterday. Okay? That's why I can do that. The model of, let's say, for example, the inversion model, And all the models, it doesn't matter. That's why you see, I've given you examples. Oh, there's an inversion on gold. There's an inversion on silver. There's an inversion on ES. There's an inversion on Australian dollar, because it's all the same thing. But once you know, not that. Once you know this, okay, and this, it becomes a lot easier. Trading's still going to be very difficult, of course, but if you just simply wait for these things to form and these to form, and you get in sync later, you're golden. Matter of fact, that's what I'm going to end it with. I got 2 minutes until the end of the hour, and I might go over a couple minutes, but that's okay. This is the last thing I'm going to tell you today. Okay? What time was that yesterday? Was that Thursday or Wednesday? Oh no, that was here. Sorry. Got lost in the sauce for a minute. Earlier when I talked about Australian dollar and I said it's missing a gap that you're not seeing, that's what I was referring to. Right there. Okay? You see entries here and here. And you saw an exit like right there, and whenever it made a new high, I think right here. Okay? And those are pretty good. All right? Obviously the lower one's the better, and the higher one's the better exit. All right, fine. But that's not the point. My point is that was an entry, down here was an entry, that imbalance is an entry, that reaccumulation is an entry, that down candle is an entry, that imbalance is an entry, this imbalance is an entry, all to go higher. Okay? Or even that gap here, the gap and imbalance. That's a good combo too. Everybody wants the lowest low. And I think where I went wrong a long time ago, when I was learning, obviously, how to trade like this, when I was learning for many, many years, I neglected anything in here because I was always like, no, I want the lowest one. I want the lowest one. Which, again, you did see yesterday on that account. On a different account, I traded this one, right? Because I used to not like getting in late. I used to not like that. But then I had to realize I'm missing out on money. I'm missing out on trades because of my own arrogance and because of my own ego. Ego is the enemy, right? Great book by Ryan Holiday. So you have to be okay, in my opinion. I mean, if you want to actually be a trader, you have to be okay with not getting in down here and maybe waiting just a little bit longer and get those later entries because you're not trading for social media. Okay? Now, if you want to be a mentor and stuff later on, yeah, maybe, sure. But I'm not going to, I can't wholeheartedly tell you to do that. Like, oh yeah, try to do this and try to do that so you can show off. Fuck showing off, bro. Make money, okay? Make money, pass your challenges, your combines, whatever, and make some money, okay? That's what it's about. It's not about getting in at the earliest convenience. Those are great. It's about getting in sync with order flow to make money. That's what it's about. Okay? So I will tell you in closing, that's what I would focus on. Don't be like me. Okay? Don't be like me and neglect the inversions or the reaccumulations because you think you're getting a bad entry. Oh man, well, John, you always talk about how we shouldn't buy on the way up, but I feel like I'm buying on the way up. The fuck you're not, dude. It's below 50%. You're in a discount. I told you earlier that 50% is considered fair value, but if the market is set to go higher, 50% is a discount. And that's why I give you these little things. So that way when it comes up in price, you're like, oh no, man, this is just below 50%. That's not good enough. Oh, wait. John told me not to be a fucking retard. Okay, I'll get in. Boom. Winning trade. Done. You see what I'm saying? That's the point. Okay? So don't be like me a long time ago and neglect all the good stuff because you want the best stuff. Study the best. Don't get me wrong. Study all of it. Because it's easier to trade the later ones when you know what's already taken place. Okay? Low risk buy. Reaccumulation. Second leg to go higher. Ooh, I didn't say that yesterday, did I? I didn't say that yesterday, did I? Low risk buy. Reaccumulation. Leg 1, leg 2. Ooh-wee. That's a good way to end a Friday, baby. Y'all be good. I think my pizza just got picked up too. So they're going to be heading over in the next like 10 minutes. All right. Y'all be good. Be blessed, man. If you had a difficult day, don't worry about that, bro. There's going to be difficult days. Not every day is worth trading. Okay. Oh, look at that shit. 286. Didn't we talk about those highs earlier, chat? Didn't I say, oh, well, it's been a bearish day. There might be trailing stops up here. Where the fuck did we go? Hindsight and foresight, baby. I did say it was low probability conditions, but I said there was trailing stops here and we went for that. So that's pretty cool. But y'all be good, man. Be blessed. We'll be here same time, same place on Monday, October 1st. See you then.